Hello guys, welcome to the Nailing FX and Crypto session. Hopefully obvious what we'll be looking at. We'll be looking at Forex, currency pairs and cryptocurrencies as well. Now my second screen's been a little bit weird here, so if you see me frown to that side, that's what I'm doing. I'm frowning at the technology. So let me just quickly make sure that we cover the disclaimers. They obviously need to be done, so please read them up in the top left hand side. Now let me just quickly explain who I am if this is the first time that you've watched any of these videos and you just happen to find it because you're looking for Forex trading or something. My name's Becky, that's my name there. My email address is becky@traddictiv.com and you can also email support@traddictiv.com. I'll show you in a minute as well where you can go to post questions in a different place, which is actually really helpful. Now let's just make sure that we cover what it is that we're going to go through. We're going to look at the current market environment, trades that we placed last time that closed for either a profit or a loss, trades that are still open and how we might be managing them, and we'll also put on some new opportunities as well as we find them. Now, I use different platforms because the viewers use different platforms. I'm going to be using TradeStation, MetaTrader and also TradingView as well. So you'll see me use different ones, and there's a reason for that. It's so that whichever one you use, if you use one of those three, it makes sense to you. Now, the other thing as well is that we are streaming in different places and many at the same time, many places at the same time, which means that we are in a bunch of free platforms, but we are also streaming within our closed coaching community, and people pay a small monthly fee to have access to that. So what we do is around about the halfway mark is we'll cut the stream to the free platforms and continue within the closed coaching community. We make sure we at least put on one trade so that people that are watching for free can see the process and understand it and at least have one sort of suggestion there or one example there. And then we continue in the closed coaching. So around about the halfway mark, that's what I'll do. I'll cut the stream off. Now, if you see me looking around as well, I'm also looking at the chat boxes for the various places, seeing who's with me. And if you have any questions, if you are watching live, please do. Oh, that's interesting. I just need to refresh that. It just told me that the chat box was offline, so I'm just going to refresh it and see. There you go, that looks better. Brilliant. Okay, great. So like I was saying, if I'm looking around, I'm looking at the chat boxes, and if you are watching live, please do ask questions because I want to make sure you guys get the most from this. So first things first, let's have a look at some trades that we placed last time and see what happened. So let me bring my list up so I'm reminded. And so let's start with this one. This was the Aussie Swiss. It was a weekly chart on the left hand side and a 144-minute chart on the right hand side. We use the left hand side to tell us what we should be doing, buying, selling or doing nothing, and we use the right hand side to help us be specific with where we do that by using apps on the right hand side that coincide with the EMA. So for those of you that follow this methodology, you know that makes sense. For those of you that don't, that are new to this, don't worry. As I'm reviewing trades we placed last time, I'll go through it a bit quickly, but I'll then break it down a little bit more as we look at new opportunities, explaining what we're doing and why we're doing it. So with this opportunity, what we did is we placed this trade to go long. The black line was our entry, the red line was our stop, and then we had these two green lines here, which were our targets. Now, the question is, by the looks of it, let's say we didn't do absolutely anything, we just put it on and we left it, we walked away, forgot about it entirely. Then the question is, are we in this trade? What's going on? Are we winning? Are we losing? If we're in this trade because we left it and we got triggered here, then we would be at a slight loss right now. The close hasn't happened, the trade hasn't closed yet, but we would be at a slight loss at the moment if we were in this trade. Now the question is, if we were a little bit better at managing our trades and checking in regularly, would we have been in this trade in the first place? So this trade triggered at 4:12 in the morning. That's my morning, so that's middle of the night. Well, middle of the night for me too, but middle of the night in the States, on the 2nd of November. Now, on the 2nd of November, what did the EMA look like and what did the autoclimate look like? Now, let's be fair and say we looked at this on the 1st of November. We weren't up in the middle of the night checking this. Let's say we looked at any point in the day on the 1st of November. So what we're going to use is a little tool here, which helps us go back in time. Let's just do it from here. Helps us go back in time and see what it would have looked at. So on the 1st of November, this is what we would be looking at. And at this point, if we looked on the 1st of November, this is by close of day on the 1st of November, the EMA was no longer lining up with our UFO. So we may have cancelled the trade. Now we may have thought, if price falls, the EMA might still line up, so we might still have left it. So depending on whether or not you were active, check this on the 1st and went, do you know what, it's not lining up anymore, I'm going to cancel it and see if I replace it tomorrow. Or whether or not you thought, oh, okay, that might still work. Then even though by the 2nd of November, which is now, or when it triggered, the climate changed, you might still have been triggered. If you are still in this trade, the climate has now changed, which means get out of it. There's no point being in a trade to the upside if you don't have probabilities to the upside. That's what autoclimate is now telling us. Not enough probabilities either way. So we would get out of this trade. So if you did cancel it on the 1st because the EMA was no longer lining up, then great, no trade. If you didn't cancel it because you weren't sure if it was still going to line up or you didn't check it, obviously we now have a situation where we shouldn't be in this trade anyway, which means we should be cancelling the trade right about where it is now and take a smaller loss than we would have, but still a loss overall. Hopefully that makes sense. That's the first one on the Aussie Swiss. Then we had the Euro US dollar, which I believe we used FXCM data for that. No? Oh yeah, we did. Euro US dollar, same time frames. So weekly on the left, I believe, and 144 on the right. With this one, we placed it on the 20th of October. And on the... So the black line was our entry. This was a short. Just checking the things that we actually missed that entry. So it would have been this one. So on the 28th of October, price came back in and entered into the zone. So we would have sold short there. So again, the question is, would we have placed that trade? So on the 28th of October, let's do that. That would be the week of that one. So if that's the 25th, so 25th, 26th, 27th, 28th. So on the 28th of October, our climate was down, our EMA was inside the UFO, so we would have placed this trade. We wouldn't have had any need to cancel it. So we would have entered this trade and we have so far hit our safety target and we're en route to our final target, which will be down here. At the moment, still be in the trade. If I come out of this on the left-hand side, we're still en route to our profit target, our second profit target. We've already taken one profit target already, so we're now safe. If price was to come completely against us, it would be a break-even trade, or perhaps even get out somewhere along there and take a little profit if we get out based on the climate. If it continues to the downside and the climate continues to be down, then we continue to ride this wave and take profits as it moves. So at the moment, this is an open trade in profit. Then we had a look at Litecoin. So some of these sessions, some of these trades were from the closed session, but we review them all when we come back. So we had a Litecoin trade. I believe it was Coinbase we used. There we go. So this was same time frames, weekly on the left, 144 on the right. Let's squidge this a bit, make it a bit easier to see. So again, we placed this on the 20th of October. That was the last session that we had. So placed it around about here. Now, it came and triggered us on the 27th of October. So let's do that same exercise again. Would we have cancelled this trade? Would we have got into it? So 27th of October, that's 25, 26, 27. So on the 27th of October, our EMA was just inside. We still had a thick blue dot and climate to the upside. So everything still lined up. Therefore, we were in this trade. We had no reason to cancel it. What that means is same as the one that we've just seen. We've already taken our first profit target and we are at the moment in profit. Our target 2 on this one was a trailing stop. So what we would be doing now, where we have these new UFOs, is this stop that was here should now be here. Should now be just below this UFO. In fact, this specific number would be 191.45, it would be. So 191.45 would be our stop loss now. So then that way, if price came against us, then we've actually taken roughly the same profit target each time. We would have made a slight profit. If it continues, then we move this stop and we follow it behind another UFO and behind another UFO. locking in profit as we go. So overall, again, this one is an open trade in profit at the moment. We should move our stop behind this UFO. So the worst that can possibly happen with this trade is we make at least a little bit of profit. So that's good on this one. Then we had a small time frame one. So we put a lot of trades on last time. Dollar yen. We had an hour on the left hand side, and that meant we had 5 minutes on the right hand side. Dollar yen. Now, of course, smaller time frames means more candles ago, even though it's the same amount of time. So let's squish this. It's probably easier to look at it on the hourly chart because it's fewer candles that tell the same story. So let me just move the chart about and make it easier for us to see what's going on. So here we go. So we placed it on the 20th of October, and this was using data that was coming from MetaTrader 5. Placed it on the 20th of October. And obviously the hourly chart was what was telling us that we should have gone short. So that's on that one. That had already formed. So we missed an entry here. Just double checking things. Just by a pip. So by the time it actually triggered, which was this candle, the climate had changed. So if we were watching this trade, we would have cancelled it. Now we might even have cancelled it anyway because it was coming to the end of the day. However, this candle was then a red climate, and it was still within the zone, so we might have got into it at that point, which is 2 a.m. my time, which is what, mid-evening US time. So again, with a lot of these things, it depends how strict we are at checking in and managing the trade. Are we looking at it every hour on the hour if we're doing an hourly trade? Are we cancelling it by the end of the day? Are we setting and forgetting and leaving it? Whether or not where you are on that spectrum of strict to less strict will depend on whether or not you actually get into these trades in the first place, or whether or not you cancel them. If you cancel them, you might have saved yourself a loss, but you also might have lost out on a win. If you don't cancel them, then you might be in trades that lose that you shouldn't have been in, but you also might be in trades that win that you shouldn't have been in. So pros and cons to each. In this case, again, depending on how strict you were, you either cancelled it and perhaps then missed the re-entry later on, or you left it and you were in right from the start anyway, or you cancelled it and then put it back on later on in the evening. So let's assume you did take that. If you did take that, then you've hit both targets, you've made a profit, trade is closed for a profit, brilliant. If you did cancel it and then you missed the re-entry, then I guess nothing. You didn't win or lose. Nothing happened. So if you were in this trade, it was a profit. If you weren't in this trade, then obviously nothing. Either way. So that was the dollar yen. Then we had the last one, which is actually the first one we put on, was pound Swiss. And this is daily and 55 minute. Pound Swiss. Here we go. Brilliant. So this one was actually we put a long position on, which means we lost this one. And this is why we use stop losses, right? Because if we didn't use a stop loss, we would have lost this one quite abysmally. We would have lost quite a lot to have just been wrong on this. If we were wrong on this, which we were, we take a small loss, something that's predetermined, and we lose a small amount. So we placed the trade on the 20th. It entered on the 20th. It went towards... came up, it did react, it did go up from there, which is what we expected to happen. Just didn't go quite far enough to hit our safety target, and then came back against us and stopped us out round about here, which was the 21st. On the 21st we still had confirmed upwards climate, so we wouldn't have cancelled it any time before then. So overall this was a losing trade, and again, aren't we glad that we took this loss at this point rather than all the way down here, which would be awful. So glad that we actually took that loss where we took it. Shame it didn't quite hit our safety target, but it happens. Overall though, just as a summary from the 5 we placed last time, we had a profitable trade, a losing trade, 2 that are open and that would have hit, and 1 that we would have cancelled. So hopefully that is a nice summary of what we put on last time, and makes sense as to why you might have been in them or not been in them, depending on how strict you are in those rules. Now, because we had a few, that's taken a while to look at, so let's get straight into placing new trades and new opportunities. So first thing we're going to do is come to fxstreet.com, have a look at the economic calendar, and just see if there's any currency pairs that we'd actually rather keep away from. So for example, what time is it now in the States? We've changed our time in the UK, but it hasn't changed in the States yet. So my brain's struggling with the maths. I think you guys are 4 hours behind. So it is, what, 9? Just gone 9. So all of this news for the pound has already come out. So that's fine. We can still be trading in the pound. Might want to give it a little while, or maybe use bigger time frames just in case there's still some volatility that's come off the back of a lot of news articles on the pound or on the British markets today. We've got Euro news that's just come out. So again, I'd say we can still place trades on it, but maybe use bigger time frames. News has already come out. You know, it's not like it's coming and we don't know what's going to happen. It will already be moving. And then later on this evening, again, this is US time, Eastern time, then we would be potentially avoiding the Australian dollar. And then on Friday, which is tomorrow, we've got the Euro early morning, and we've got some news on the US dollar and the Canadian markets as well in the morning. So I would suggest for today, the Euro pops up a couple of times coming up, so we'll try and avoid it, or if not, we'll just try and use it for bigger time frames. So what we'll do, I'm going to come to my scanner here, which is on TradeStation. We will find, hopefully I'm going to look here first, which is our majors. So all of our currency pairs that align with or that are paired with the US dollar. We'll have a look at these and then we'll use MetaTrader to go and find whether or not we have an opportunity. And then if we can't find any here, then we'll come across to our cross pairs and then we'll use TradingView on our cross pairs. So that way I've got like a structure as to which platforms we use and why. So let's start on our bigger time frames. For those of you that understand the scans, you know why I'm picking this. I'm going to skip past explaining the scans today and tell you that we are going to look at the US dollar Japanese yen, because it's the only one on this scan on this time frame that's giving us decent opportunity to even have a look at. So US dollar Japanese yen daily time frame on the left. So let's come to MetaTrader to do that. Already got the dollar yen here, daily chart on the left. Dollar yen here. So because it's MetaTrader, we won't be able to have a 55 minutes, so we're going to have a 1 hour. We're going to see what the situation is at the moment. So looking at it here, we don't have an opportunity, unfortunately. The reason for that is because, and I'll take a little bit of time now just to explain the methodology very quickly. AutoClimate, which is this app here, it's a free app on most platforms you get it on. AutoClimate tells us where the probability lies. So we have a thick blue dot there. That's AutoClimate telling us we have probability upwards. So if you're going to do anything, buy. So then we need to go, okay, what are the rest of the probabilities associated with buying? Now we want to buy with lots of other buyers. So we use AutoUFOs, which is another app, to help us figure out where the buyers are. So AutoUFOs is telling us that on an hourly chart on the US dollar Japanese yen, we have buyers between 113.597, call it 113.6, to 113.463. Again, call it 113.46. So we have buyers in between those numbers. So we want to buy with them. But we want to add extra probabilities in this. We only want to buy with them if it also coincides with the EMA value on the bigger time frame. The EMA value is a moving average that lots of people use the EMA to help them enter positions. So we want to basically buy with buyers where extra buyers might be in the context of a buying opportunity. That's what we're doing. So the EMA value is 113.88, which is here, just under where current price is. It's not aligning with this UFO. We need those two numbers to align to give us extra probabilities. So we don't want to place this trade where we don't have those things lining up. So nothing on that one. Let's come back to TradeStation, see if we have anything on smaller time frames. We actually have on a smaller time frame a dollar yen short and also a dollar Canadian short. So let's have a look at dollar yen on a smaller time frame. So if it is 240 on the left hand side, it would be 21 on the right hand side. Can't do 21 on MetaTrader, so we'll do 15. So let's have a look here. Now the data here is coming from a slightly different place. So what we actually see here, and let's be true to what we see in front of us. Let's just spread that out a bit. Our AutoClimate here is a thin dot. Now, auto climate showing us a thin dot is telling us we don't have enough probability either way. So no point trading. Now, on TradeStation, which is using Oanda data, because especially in Forex, it's different exchanges, which means the prices are slightly different, which means the probabilities are slightly different. On Oanda, we might well see that the 4-hour chart for the dollar yen is a confirmed downwards climate, which is what it told us on the scan. In fact, that would be what we see. But that's not what we see here on MetaTrader, and I don't want to confuse things by going and placing shorts that aren't actually lining up. If we're going to be using MetaTrader and MetaTrader's data to trade with, there's no point trading on an exchange that has different probabilities than the exchange that you got the opportunity from. Doesn't make any sense. So we will skip past that, unfortunately. Let's have a look back and see which one that was. The dollar Canadian on the same time frames might be giving us an opportunity. So let's have a look at that for a long. Wrong one. A long on the dollar Canadian. Obviously just loading here. So I think by looking quickly, and we'll double check here, by looking it's not lining up. No, and it won't. So same situation as we had on the first one that we looked at. Yes, we have a thick blue dot, probability upwards. If we're going to do anything, we should buy. If we buy, we want to buy with lots of buyers. So we want to buy at those green UFOs because they show us where the buyers are. But we only want to buy with those buyers if there's also going to be other buyers there. So if the EMA also lines up. Now the EMA value is 1.241, which is here. Again, nowhere near the UFO. So we don't have things lining up, so we don't trade it. Then let's have a look. I think we have one more opportunity to look at for the dollar pairs. If not, then we'll move on to the cross pairs and have a look at what we have there and look at a different platform to do that. And if we can't find any opportunities there, I'll take whatever suggestions you guys have that are watching live in the chat box, or we'll look through some cryptos as well. So we will find something, I'm sure. It'd be unlikely not to find a decent opportunity at least somewhere on something. So dollar Swiss, 60 minutes. So again, moving down a time frame again here. So dollar Swiss on both of these. We want an hourly time frame on the left, which is a 5-minute time frame here on the right. Let's just wait for that to load. It's taking a little second here. Whilst that's loading, let's come back to TradeStation and just double check that there's nothing else going on. So we've looked at, weirdly that dollar Canadian has moved away. So we looked at this one, which was a dollar yen on a bigger time frame. We did it because we had a near sensible opportunity with a confirmed upwards climate. That's what the scan is telling us. We looked at the dollar yen short opportunity. It wasn't the same climate on the data we were using. And now we're looking at the dollar Swiss on even smaller time frames because we have a near sensible opportunity with a confirmed downwards climate. So hopefully this will be the one that lines up and we'll be able to place a trade. So let's have a look. So we have, luckily, the same climate data here. We have a thick red dot, that's probability downwards. The EMA is 0.912. Perfect, that's just where this UFO is, which is just where it's entering here. So we have red UFO, that's sellers, with other sellers at the EMA price, which is great. So we are 0.9129, yeah, plus a little bit of wiggle room. Brilliant, so we're going to place this trade. What we're going to do is we're going to come to TradingView to finish this. So this was dollar Swiss, it was. Dollar Swiss, let's use FXCM data. And it was an hour here and therefore 5 minutes here. And what we'll do is we'll take the data. So I'm placing it on TradingView just because it's easier really with the maths, to be honest. But if we're using MetaTrader data, then we're using MetaTrader prices, assuming that we would be placing this trade through the brokers that we're using with MetaTrader. So this is going to be dollar Swiss. It is 1 hour, 5 minutes. It's a short. So the entry is going to be 0.912. 9126. Ah, you see what's just happened? That UFO's disappeared. That UFO has disappeared, and that means the sellers are no longer there. The sellers are no longer there. We don't want to be selling it. Let's see. 0.9129, which is here. Do you know what? This UFO might actually work out better for us, because as price moves up, the EMA moves up, and it's only got to move up a couple of pips in order to align with this. So let's take this higher UFO actually. Might actually be a better situation. So in which case, the entry price is going to be 0.9131. The stop loss will be 0.91367, round it up to 37, add a couple of pips, so that's 39, and then add 5, which is 44. So I've just added some wiggle room and extra movement for the spread there, but the stop loss is going to be 0.9144. So let's come back to TradingView to complete this. Here we are. Okay, so it's going to be roughly this one. The prices are actually the same, so that's good, that's helpful. So 9131 to 9144. So our entry is the black line, our stop is the red line. Now our final target, let's come back to MetaTrader because we're using that data. Our final target is going to be the top of this UFO here. We're selling. We're selling because there's lots of sellers with other sellers in the context of a selling environment. So the only thing that can stop that is buyers. So we want to come to this bigger time frame and find where the bigger stack of buyers is. So this green UFO starts at 0.90965. So I'm going to round that up to 0.9097 and then add a couple of pips, which is 0.9099. So 0.9099, that is 0.9099, that's our final target. Let's just put that in. I like to draw it on the chart here. Again, we'll ignore that the data is a little bit different here because we are assuming that we are using MetaTrader data and trading with MetaTrader. So we use TradingView. I like to use TradingView to do the maths anyway because it's easier. You just put in your entry and stop and everything has worked out really for you. So it's 13 pips start to finish, which means we want 13 pips. UFOs just disappeared. We want 13 pips start to finish, and that's because our first target is always 1-to-1. It's always there to be safe. So if we get movement a little bit, but not a lot, we at least break even because we make a little bit here and we lose a little bit there. I'm going to risk 50 bucks, and that's just because it's a nice round, easy number. You pick whatever number is best for you. So that one goes in there. Go away that little pop-up. And we'll place the next one, 9131. Stop loss is the same, risk is the same, and the profit target is going to be 0.9099. So that trade's now gone in. So what that means is that we have placed our first trade of the session. This is a small time frame trade. We're placing it because we have probability to the downside on an hourly chart because of the climate. So thick red dot, probability down. We have sellers here that are likely to align with our EMA number. As price moves up, the EMA will move up, and it's only got a couple of pips to go before it aligns with here. So it's likely to line up, and then we have sellers with sellers in the context of a selling environment. If you are placing small time frame trades on any market, doesn't matter if it's Forex, stocks, whatever, you need to be checking it regularly on small time frame. So I would say check it. You could say every hour, but I'd say check it more often than that. A lot of times as well, you may want to cancel your day trades by the end of the day so that you're not exposed to risk overnight because you're not able to check it, assuming you're asleep. You might be a night owl, in which case fine. But hopefully that makes sense. That's our first trade. Let me put a little note on there. So placed on the 4th of November, MT5 data. So that was the data that came from MetaTrader 5, which again, let's just show you very quickly what that looks like. Same thing, we're still seeing UFOs, we've still got our climate, we've still got our EMA, it's exactly the same thing, but in Forex we have different exchanges, which means the prices are slightly different, which means the data is slightly different. Don't use MetaTrader data and then go and place a trade on a broker that's coming from a different exchange. use the data that is the one that you're trading with. So often, okay, thank you. So often we use Oanda data because that's the same data that we have in TradeStation. So when we place the trade on TradingView, we place it using Oanda data. And we do that again because we want to make sure that it's all aligned. I know I'm using different platforms and talking exchanges and data and things like that. If you're completely new to Forex, don't worry. The more you watch these kind of videos, the more it makes sense. If you are experienced in Forex, then you know what I mean anyway, but hopefully that makes sense. You can email me if you're watching this recorded and you don't know what I've been talking about. You can email me if you want clarification on anything. That's becky@traddictiv.com. And then there's also, again, preferably this is where you'd go, tradewithufos.com/Becky. You can get apps from here, book one-on-one coaching, or most importantly, post your question here so that I can then answer it there and we all learn from that space. So for those that are watching on the free platforms, I'm now going to stop the stream and I will continue in the closed coaching. Wherever you're watching on the free ones, hopefully this was helpful. Hopefully it made sense. Hopefully it gave you some things to think about. And I'll see you on the next session. For those in the closed coaching, just bear with for a couple of minutes and then we'll crack on and look at some new opportunities as well. So give me a minute. Take care, guys. Bye-bye.